What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday, and it feels like one of those weeks where it's finally Friday, and it finally is the weekend, and it is finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. One word of note is I am recording this around 12 Eastern Time, noon Eastern Time, 9 a.m. Pacific Time here on the West Coast. So my apologies. I do have to record this early. Got some family stuff going on later today. Kick things off like we always do with Meta Platforms. Start of the week at 463, trended higher about 1 3/4%, pending some late rally or late crash on the stock market. Meta finished the week right around 471. The company is experimenting with an AI-assisted headset. So this is going to be really interesting, okay? We've talked a lot of crap on the metaverse and the Oculus goggles, and we'll talk crap here in a minute on Apple's ski goggles that I always talk about. But look, this would be like talking crap on an early cell phone, those big handset bricks that you had, or you had them in your car or something. Eventually, it evolved into a device that more or less changed the world. I actually think that these AI-assisted headsets could become a big thing. And so Meta is investing a lot of money. And I tell you what, it better become a big thing for the company based on what they're spending. And we'll see where it goes. And we'll see who ends up winning or being a major player in this race. The fact, got to give props to Meta investing in it, but it has, impacted the company financially. Now, the company is confirming that Workplace is shutting down, and it's going to focus on AI and those metaverse headsets as well. Workplace was a Zoom-like or a Microsoft Teams-like product, which kind of popped up during the pandemic and now being shuttered down, and you're going to be directed over to Zoom. Moving on to Apple, start of the week at 184, and they're buying back those shares over at Apple, up over 2.6% to finish the week. Close to $190. Now, Apple and OpenAI, this is huge. This is the biggest news that we've probably gotten in months for many of these companies. OpenAI and Apple, again, just a rumor, but it appears that the two companies could be laying the groundwork for AI to come to the iPhone, but powered by OpenAI. And this is what we've talked about a couple of times here on the channel. We've talked about how, we didn't think that Apple would develop their own large language models and just, build a bunch of data centers and power this stuff on themselves. Instead, probably the better business decision is just like you charge Google $20 billion to be the default search engine, charge OpenAI/Microsoft tens of billions of dollars to be the default AI engine on the phone. Now, it comes with some risk. Obviously, that Google search engine deal, that's coming with all kinds of risks. That is being tied up in court, and we'll see if that is allowed to go forward or if Apple is going to have to make some changes to that arrangement. Also, we're not really sure about the economics of this deal. And that is going to come into question ahead of the Worldwide Development Conference, and an analyst over the next year or two is going to be wondering about the economics of this deal. It has to be, I tell you what, it has to be that OpenAI is paying Apple for the privilege to be on the device, because at some point, Apple could release their own AI. They could develop this, and they could be years late, and people are still going to use the products and use the phones. But what price does it come? Is it a big price? Also, how does Apple help facilitate the AI coming to the phone? How good is it? How advanced is it? How fast is it? And we'll see. This is really exciting for Apple. It's a pivotal moment for the company, but I also think it's a pivotal moment for Microsoft as well. Now, workers at Apple's first unionized store in the great state of Maryland, they have voted to authorize a strike. Now, as you guys know, I'm not exactly pro-union, but I am pro-union in the fact that they are more than welcome to strike and unionize, but Apple has every right to respond to these people and probably replace them at some point. Now, Apple is preparing to sell its Vision Pro headset outside of the United States. This is a nothing burger. This is an overpriced device that really has very few use cases, at least at the current time. It is a device I see that could morph into something that is far more useful and far more profitable for the company. But in the meantime, It's a pretty sick looking pair of ski goggles that cost over $4,000. Now, carrier surveys show that iPhone demand was soft in April. Makes a little sense. You're moving into kind of back to school season. We're also seeing a lot of pressure that the consumer is under, particularly on the low end, mid to low end consumer. The high end consumer is probably just going to wait another couple of months until they release the new iPhone and maybe get new carrier subsidies to go along with it. Moving on to Amazon, start of the week at 186, slipping down a little bit by about 1.2%, finished the week at 184. The company is going to invest $1.3 billion in France. They're going to put another $8.4 billion in Germany, all for cloud infrastructure. Last week, I think it was Singapore or somewhere maybe in South America that was getting tens of billions of dollars. And this all comes as AWS leadership is changing as you've gone away from Adam Silipsky to the new CEO, Matt Garman. But I tell you what, this is a company that more or less runs itself. And I tell you what, Andy Jassy, while he's not Jeff Bezos, has at least proven to me in the short term, he's a very good operator. Could turn out to be like Tim Cook, where he doesn't do anything super innovative, doesn't really change the direction of Amazon, but he's really good at operating. And he's actually maybe better for shareholders than Jeff Bezos was, although that's probably hard to match considering how great he was. Now, Amazon Zoox robo-taxi being probed after 2 crash reports. Now, this slipped under the radar of the news media, particularly because very few people are riding Zoox, and these are still kind of more or less in beta testing. But this all goes to support my argument around Tesla. The fact that their robo-taxis is going to be under the most intense microscope that you've ever seen, because the news media, which is primarily liberal here in the United States and maybe globally as well, but particularly here in the United States, they are no fan of Mr. Elon Musk. Any mistake, any crap, this would have been major news, top of CNN, top of CNBC, top of all financial news. If you have 2 robo-taxi reports or crashes from Tesla, that is going to make major news. That is going to put the pressure on Tesla. Can they step up and match that? We'll end up seeing. Now, moving on to Netflix. Start of the week at 607. This stock just keeps going up. I want to buy Netflix stock, but I can never get it. It just keeps going up to 619. This major news from Netflix this week. Okay, they're going to live stream 2 Christmas Day NFL games. Now, I think this is going to show up tangibly on Netflix's earnings reports. Like when we see these deals for Apple and certainly YouTube with the NFL Sunday Ticket and Amazon with their Prime game, like it doesn't show up because these companies have like almost north, in some cases, $100 billion in revenue, $100 billion in profit for a full year. We're not talking about that with Netflix. This is not cheap to get 2 NFL games on Christmas. This is big news for Netflix. They stepped up with major dollars because the NFL has no reason to do this other than to make money. And so Netflix pulled a big wad of cash out of their wallet. And I think it's going to show up on both sides. Probably on some content spend. Obviously, that'll show up in the first quarter of next year. But on the ad side, this is great to bring in those ad dollars. Netflix is going to be calling Bud Light and Ford and GM and all these companies that spend, millions and millions of dollars on advertising, and they're going to be able to get the advertisements on Christmas, and then they're going to be able to upsell them and cross-sell them onto 40 million users that are now a part of the ad-supported plan. Really interesting strategy by Netflix. They also have that boxing match between, I think it's Logan Paul or Jake Paul, I can't remember, and obviously the legendary Mike Tyson. Netflix got a lot of cool things going on, and it's a cool company, I think. Now, Comcast is going to reveal its own streaming bundle where you're going to get Peacock, Netflix, and Apple TV at a deep discount, and they're calling this everyday pricing, not introductory pricing, and it's going to be at a reduced price to anything in the market today. I think here's what the strategy is, and I don't know. I don't have any inside knowledge on this, but I think this is what's going on. Comcast obviously gets a wholesale agreement with Netflix and Apple TV, and Netflix and Apple TV and others give wholesale agreements to Verizon and others for these types of things. So these wholesale agreements with Netflix, it's nothing new. What I think Peacock is probably doing is they're getting a wholesale rate for Netflix and Apple TV, and they're going to be selling this at a razor-thin margin to keep Peacock subs and Peacock interest high because then they're going to do ad supported on Peacock, which I think they already do. And so you're going to be able to sell Netflix, sell Apple TV. Netflix, obviously the premier service here of the three. Could argue maybe Apple TV is right up there as well. Peacock has some live events, including golf and other things in the Olympics. But I think this is to keep Peacock subs really high, keep ad interest and ad flowing through the platform, and the company will make money on the ads rather than selling the package. We'll see if that's ultimately the strategy. Now, moving on to NVIDIA, start of the week at $8.90. Ahead of earnings, NVIDIA popping by nearly 5%, finished the week close to $9.34. NVIDIA-backed CoreWeave, which is an AWS-like kind of cloud provider, they raised $7.5 billion in debt. I can tell you what, every week this company is like raising money. They're either raising money via equity or they take the NVIDIA chips that they have in their data center and then they go and raise money using that as collateral. This company is exploding. Wouldn't surprise me if they go public probably in the next couple of years, honestly. Now, Microsoft plans to offer cloud customers AMD AI processors, that MI300 chip, that is coming to Microsoft as an alternative to NVIDIA. I don't really think this is anything against NVIDIA as much as this is probably really good for AMD. And we actually saw this week AMD shares reacting very positive to this news because this is a gigantic customer, up 9% AMD on that news. And obviously here on the channel, we've been a pretty big fan of AMD. Now, China is asking its tech firms to favor local AI chips. We probably should cross out ask. It's telling its tech firms to favor the AI chips over NVIDIA's as they are trying to develop their own homegrown technology. And look, that's the right strategy if you're in China. If Joe Biden and probably Donald Trump, if he gets reelected, if they're going to play ball when it comes to semiconductors, you can't just sit around and lose that game. So China's got to get its local firms to basically copycat NVIDIA, copycat AMD, copycat Intel. And guys, that's been the blueprint and the playbook for China for as long as I've been alive. And that's exactly what they're going to do. Now, the company, NVIDIA, is seeing limited signs of a pause at a Blackwell launch. Now, you've got this really, really major launch of Blackwell. I think that's coming in maybe third quarter of this year. And you have a tremendous improvement or a pretty big improvement, meaningful improvement in terms of performance and capabilities. But NVIDIA is seeing just limited signs of customers saying, well, it's almost like the new iPhone coming out. You kind of wait for the new one to come out. NVIDIA is seeing limited signs. We'll obviously get a clearer picture when the company reports earnings next week. Moving on to Google, start of the week at 164, boom, up over 6%. Finished the week closer to $175. HubSpot, which is like a really big company. This thing's worth $31 billion. Google allegedly making maybe a bid to get this company. Now, this is another kind of like tech ad play. I tell you what, if you're Amazon and you can't buy a $1 billion robot vacuum maker, if you're Walmart and Senator Elizabeth Warren gets mad about you buying a Vizio HD TV and there's like a million TV brands out there, I don't know how the hell Google gets this through regulators, but they'll probably grease some palms in Washington and get it done. Now, Google pouring their focus into AI as they just had their developer conference. What I got out of this, man, if you rely on SEO traffic, first of all, that's been dead for several years, but it is gone. If you were trying to get traffic to your website through Google, it is, you better get on those social feeds and other places, get people's email addresses and all those types of things because that is going away because they're going to be jamming AI in the tops of those results. Now, company unveiled their 6th generation TPU, which is very similar to a GPU in the fact that it runs a lot of these AI applications inside of that data center. Google partners with a great company called Broadcom to generate and develop these TPUs. And I tell you what, Google is right up there with NVIDIA in terms of advancement. Although Google uses this primarily internally, they obviously don't sell it to other people outside of their Google Cloud processes. But we've also seen more recently Google's cloud has turned profitable from an operating standpoint, and some of that has to do with they're using their own silicon and they can control the prices and not send a bunch of money to Jensen Huang and NVIDIA. Moving on to Microsoft, start of the week at $4.13. We said you could buy 2 FAANG stocks. This from technically. Fundamentally, it is always more or less a matter of opinion. And I guess you could say the same thing about technicals. But Microsoft was one of the stocks that you could buy, and we'll see it technically here, up about 1.5 points this week to finish the week We'll just call that 420. Now, Apple and OpenAI, we talked about this during the Apple segment. This is huge for Microsoft. Man, they got their butt kicked during the era of the smartphone, and here they are coming back in, potentially powering the smartphone into the next generation in terms of its software, and we'll see what they have to do here. I think they're going to have to pay up, but I think it's worth it. They're going to get so much data, so much access, so much ability to expand their their product offering at OpenAI, and maybe turn OpenAI into the Google, if you will, of the next software generation. Now, company unveiled GPT-4o in its latest flagship model, and they said it's free for all. Why am I paying $20 a month? I think I'm paying $20 a month, so maybe I should just cancel and get this for free. I've tried it out. It is faster. In OpenAI or ChatGPT, it works to different levels of speed. Sometimes it's really fast. Sometimes you're on there and it operates a little slowly. I've only used it casually. I haven't really put it through its paces, but I did notice just on the surface level, it is a bit faster, and I did notice that I am a slightly happier with some of the results, although my use cases not really putting it through its paces. Now, speaking of putting through its paces, Microsoft has got its foot down on that carbon emissions as its emissions rose 30% since 2020 amid surging AI demand. These companies are going to have to offset this some way because they like to prance around saying that, it's all peace, love, and harmony here on the planet Earth, and they're going to go to zero emissions by some measure at some time in the future. So the way they do it is they buy these offset credits. They don't power all of their data centers. In fact, it's possible with a solar or clean energy. They end up buying clean energy in some other state or some other country, and that just offsets the carbon that they're emitting in some other part of the country. They're going to have to continue to do that if they want to maintain these carbon pledges. Moving on to Tesla, start of the week at 173. We said technically you probably could buy Tesla too. It was Microsoft and Tesla, the two stocks that you could buy. And Tesla up about 3% this week to finish the week. We'll call it at 179. The company is reportedly considering data centers in China. I don't think this is reportedly. China's probably going to require it, particularly on that self-driving stuff. Now, Tesla also winning one round of approval for expansion of its Berlin Gigafactory. I think the biggest challenge with the Berlin Gigafactory is just keeping the damn thing open, as they've had arson, and I think last week it was protest. So expanding it might be low on the list. Now, this didn't make the news, but this actually is pretty tangible to Tesla. You can come to Tesla's website. Here's the Model Y, which I think is their most popular vehicle. And now for 9% down, and they have some kind of subsidized APR. When you look at Ford and GM and other car makers, they have like a financing arm of the company where they supplement and subsidize the APR. Because in the past with zero interest rates, you didn't really even have to worry about this. But with interest rates at 4, 5, 6, 7% to buy a new car, this actually becomes very important. And Tesla is now at a 0.99% APR for 60 months. It means you can get one of these bad boys for $495 a month. Everybody is always like, oh, Tesla's so expensive. $495, guys. Like, that is not that expensive, okay? Now, when you take out your gas savings and the income tax credit that you get, it's $720, but you will save money in gas, particularly if you have solar on your roof. Then you're saving a lot of money. Now, moving over to the technical segment of the show. I mean, this is like the most resilient market I've seen in a long time, guys. This reminds me a little bit, kind of scary though, reminds me a little bit of that 2020 timeframe when we were doing these shows and the market would just go up. I mean, you'd had COVID and all this other stuff going on. Businesses' revenues were declining. Bad stuff was happening. You had wars and protests and all this stuff. And the market just climbed up and kept going higher. That's what we're seeing in the most recent market. Should meet some overhead resistance probably next week or the following week. Should meet some resistance, maybe get pullbacks. And I tell you what, you get a 50-cent pullback in any of these stocks. It's pretty much a buy. Meta hesitated at the level that it was at last week, so nothing has really changed. Did get rejected at this level about 480, but nothing's really changed with Meta. We are seeing a lot of these stocks, they are declining in volume, so this isn't really one of these monster strong rallies on higher volume. Meta, any pullbacks, particularly back south of, we'll just call it 420, is probably a good buying opportunity. Apple broke above kind of the downtrend it's in, but it's still in sideways consolidation. You're consolidating between 166 and 195. And until I think fundamentally you have to blast this one higher. The buyback's probably enough to keep Apple in this sideways consolidation range, but fundamentally we have to see something from Apple that makes us think, okay, we're going to go from 1%, 2% sales growth over the next year or two to something maybe in the mid-single digits. That would absolutely send shares well north of $200. Now, moving on to Amazon. This is as beautiful it gets right here, guys. Uptrend on Amazon. I mean, it's just absolutely beautiful. Netflix should meet some resistance at the previous highs that we made here back in April. That'll be up at about 640, my guess. If you're just relying on these technical charts, S&P 500 stocks like Netflix hit a wall next week. You get pullbacks. Those pullbacks should be bought. Now, what could really send the markets into either a tailspin or a absolute party mode is NVIDIA. We are setting up at the highs. The stock has not been able to get above its March highs, at least in any significant manner. That's right here at about $950 per share. Just simply has gotten rejected every single time. NVIDIA reports their earnings just 5 days from now, and it'll be critical. Great earnings, great guidance, shoots us to new highs, cancel out everything I said about the S&P 500 and probably Netflix testing lower levels. Everything will probably shoot up in sympathy with that. If this thing gets rejected on weaker than expected earnings or weaker than expected guidance or any kind of weaknesses, this thing pulls back, and that is when you run out and get your wallet and get ready to buy. Now, speaking of buying, Google is just making new highs here, pretty much like the S&P 500. Dips in Google, probably back to 159. That's your first opportunity. Microsoft, talked about how this one was a buy. The reason why it's a buy, folks, is you are in this channel. I love channels. I'm not talking about TV channels. I'm talking about technical channels like this that play out over a long period of time. There are some stocks that we've looked at that have done this for almost their entire history. Now, more recently, Microsoft's been doing it for about 2 years. If you want to have a little bit of safety in, you wouldn't want to see Microsoft get below 388, probably even more on the aggressive side. You wouldn't want to see it get below 360 because eventually this thing will flatten out. It'll start looking more like Apple. But until it actually proves that, until it actually does that, you got to assume that this channel will continue. And here we are at the bottom of the channel. And over the past 2 years on a daily chart, you've had like 10 days to buy this stock at the bottom of the channel. And every single time, it was the right decision. That's why earlier this week, you bought Microsoft. Now, moving on to Tesla, also much more speculative technically. Not at all, like literally not at all technically telling you to buy, but a couple of things told you to buy. First of all, we've had the green box on this stock for a long time. Green box means buy. Tesla has long consolidated between 106 and 415. And we're talking for 4 years now. It's been consolidating. If you bought in the green box, you haven't got hurt. You might not be up a ton of money, but you haven't got hurt on this one. We also think that potentially you could be reversing in Tesla. These lows you made back down here in April were kind of a blowout bottom, if you will. Some of you that have newborns probably know about like blowouts in the diaper. That's more or less what Tesla did. It blew out the bottom of a technical channel that we were in. Usually when you see this, it can mean a reversal. It also means the same if you break out the top. It also could mean that the downtrend is over. So when I saw this blowout bottom, we found some support here at 170. It makes me believe potentially that we could be in some kind of sideways or upward chop on this one going forward, heading into the summertime. We'll see if Tesla's able to do that. Fundamentally, probably a different story technically, but if this materializes with Tesla, you could have bought for like 170 something with upside back into the 200s, with high upside back into 280, and your downside is probably retesting these areas at 140. Folks, that was FAANG Stock Recap Show for Friday, May 17th. I hope you all have a wonderful Friday and a safe weekend, and I'll see you again next week. Good luck with your investments.